They tell you that capitalism was built in boardrooms, by men in powdered wigs, signing contracts, and forming respectable companies. They sell you a story of innovation, of risk-takers in cities like London and Amsterdam, building the modern world with ledgers and laws. But that's only half the story. The other half was written in blood, salt, and silver. Because the original model for high-risk, high-return investment wasn't perfected in a stock exchange. It was perfected on the high seas by pirates and privateers. These were not just random marauders. They were the world's first venture capitalists, turning state-sponsored theft into a global business model. They financed disruption, targeted inefficient monopolies, and distributed profits to their shareholders that included nobles, merchants, and even the Queen of England herself. This isn't just a story about treasure chests and cannons. It's the blueprint for how nations weaponize private enterprise, how risk is monetized, and how the brutal logic of plunder became the respectable language of investment. And if you think that system is gone, you haven't been paying attention. To understand this, you have to picture Europe in the 1500s. Spain had struck the jackpot in the New World. A river of gold and silver flowed from the mines of Mexico and Peru across the Atlantic into the Spanish treasury. This treasure didn't just build palaces and fund armies. It fueled a global empire so vast, they said the sun never set on it. But this empire had a fatal flaw. Its wealth was concentrated into a single, predictable supply chain, the treasure fleets. And in finance, as in war, concentration creates a target. England at the time was a scrappy, indebted island nation, desperate to catch up. Queen Elizabeth I didn't have the mines of Potosi, but she had something more valuable, an appetite for asymmetric warfare. She couldn't afford to fight Spain's massive navy head-on, so she outsourced it. She issued letters of marque to private captains' men like Sir Francis Drake. This was a legal document that turned a pirate into a privateer, a state-sanctioned freelancer in the business of economic warfare. The business model was shockingly modern. It was pure venture capital. A syndicate of investors, courtiers, merchants, even the Queen herself would put up the capital to fund a voyage. This seed money paid for the ship, the crew, the cannons, and the supplies. The privateer was the CEO of this high-risk startup. His mission was to sail to the Spanish Main, intercept a treasure galleon, and bring the plunder back home. If the voyage failed, if the ship was sunk by a storm or destroyed by the Spanish Navy, the investors lost everything. Total write-off. But if it succeeded, the returns were astronomical. When Francis Drake returned in 1580 from circumnavigating the globe, his ship was laden with stolen Spanish silver. The haul was so massive, it was worth half of England's entire annual revenue. His investors received a return of nearly 5,000%. The Queen's share alone paid off England's national debt and funded new investments. Sound familiar? It's the same logic that fuels Silicon Valley. Fund a dozen risky startups, expect 11 to fail, but the 12th might become the next Google and pay for all the losses 100 times over. The privateers were just doing it with cannons instead of code. This wasn't just enriching a few investors. It was a national strategy. Every Spanish galleon captured wasn't just a win for England. It was a devastating loss for Spain. Spain's empire ran on credit, borrowing heavily against treasure that hadn't even arrived yet. When a fleet was lost, it could trigger a sovereign default in real time. Spain, the richest empire in the world, declared bankruptcy 4 times in the 16th century alone. Drake and his fellow privateers weren't just stealing gold. They were collapsing Spain's credit. Meanwhile, the stolen silver flowing into England was reinvested. It funded the Royal Navy. It capitalized new trading firms like the East India Company, and it helped build the banking system in the City of London. The profits from piracy were directly converted into the foundations of the British Empire. It was a perfect feedback loop. Plunder financed the state, and the state sanctioned more plunder. This is the brutal truth they don't teach you in business school. The line between investment and extortion has always been blurry. The venture capitalist and the pirate both understand the same fundamental rule: find a fragile, inefficient system, disrupt it with force, and extract the value for your shareholders. You might think this is just a colorful story from the age of sail. You'd be wrong. The model never disappeared. It just put on a suit and tie. Think of the corporate raiders of the 1980s. They saw large, inefficient companies as treasure galleons, loaded with assets but poorly managed. They'd borrow money, a leveraged buyout, to take control, break the company up, and sell the pieces for a massive profit. The language was different, but the logic was pure Francis Drake. Or look at modern activist hedge funds. They buy a stake in a company, then use their leverage to force changes demanding stock buybacks, cost-cutting, or asset sales. They are the privateers of the 21st century, targeting corporate ships they believe are sailing inefficiently. The goal is the same: extract value for the investors. Even the startup economy rhymes with this history. Venture funds pour money into disruptive technologies designed to sink established industries. Most fail, but the few that succeed, the Ubers and Airbnbs, capture the market and deliver massive returns, leaving a trail of creative destruction in their wake. The rhyme is clear. Finance, at its core, is often about calculated predation. Whether you call it privateering, venture capital, or activist investing, the goal is to use capital to exploit a vulnerability for profit. The pirates were just more honest about it. So why does this matter? Because we live in a world built on the foundations they laid. A world where nations still use economic warfare, where corporations are used as tools of state power, and where the financial system rewards disruption, sometimes without counting the cost. We're taught to see pirates as chaotic outlaws. But the most successful ones were disciplined entrepreneurs running a high-risk business with precision. They understood capital, risk, and return better than most bankers of their day. They didn't just invent a new way to get rich. They demonstrated that the greatest profits are often made in the gap between what is legal and what is possible. History doesn't repeat, but if you don't understand it, it will crush you all the same. The story of the privateers is a reminder that our financial system wasn't born from enlightened ideals alone. It was also born from the cold, hard calculus of plunder. The ships may be gone, but the same winds of profit and power are still blowing. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.